I'm Will Hadfield, and we're talking about trading now. I'm conscious that we're the only thing between you and your lunch, but this is the panel about actually making money from crypto. And to begin with, we have Michael Lee from Flow Traders, who many of you know as Europe's largest ETF trader. Michael's head of crypto trading, the crypto desk at Flow Traders. And I guess, Michael, there's kind of an interesting contrast going on with crypto this year, in that while it's been going solidly one way, and that's down, actually some of the tools that you need to do your job, talking hedging, trading other things as well, have actually become a lot easier. So perhaps if you could sort of explain what you do.
So we are a liquidity provider in several financial instruments, and cryptocurrencies is now one of them. Started a year ago, we started trading in them. We've seen a lot of developments in several areas, which makes it a lot easier for us to trade. Obviously, new products are being listed, like the futures. This allows investors also to trade these kind of products, which weren't there before. Platforms are becoming more professional. I think last year, all exchanges couldn't really handle all the interest it got when it spiked up until almost 20,000. And they've been working on that a lot, the last couple of months, I would say. Okay. So the infrastructure just got a lot better for us.
Excellent. And Laurent Kssis from XBT Provider. Now, Michael actually trades some of your, both of your exchange-traded products, which are listed in Sweden, one Bitcoin, one Ether. And maybe you could sort of like tell us about what it's like for your firm as an issuer of these products.
Sure. So ultimately, the problem that Michael has is very much similar to an issuer. We need to build an infrastructure, and without that infrastructure, we cannot potentially provide these kind of issuance onto the market. And it's very paramount that we make this right, because otherwise, if you're going to list a product on a regulated exchange or any exchange, you want it to be successful. If you don't have the liquidity behind it to provide that issuance, then you're going to see issues in the price, and that's the last thing you want as an issuer. So it's important to build, first of all, the liquidity, and we heard this on the previous panel where they talked on more STO, but it's exactly the same for new issuance in this market. We need to work closely with companies that can help us making markets on these products. So we build an infrastructure. We have to have custodian. We have to have partners, particularly banks, because we can't avoid that. We need to be working closely with them. But also, we need to have, there is a very big ecosystem around it. So I mentioned custodian. The likes of prime brokers today are starting to embrace a lot more this asset class. 6 months ago, 8 months ago, if you mentioned to a prime broker, could you custody our Bitcoin? They would look at you and say, well, sorry, the door is here, and you're not going to go very far with us, because our compliance is literally saying, do not touch them. So there are detours, and we certainly find a lot of them. Certainly, you in your business have managed to do so very well. We've done this now for over 3 years. We've listed the Bitcoin ETN, the ETP on the NASDAQ exchange. That was a big leap 3 years ago. We were the first ETP, and all of this obviously created quite a lot of interest from the market. So we are a retail product. This is where the liquidity comes from, retail investors. We have over 65% of retail note holders. But all of these access via their brokers. So we had to go around and speak to all of the broker community, mostly retail, to make sure that they were comfortable with this instrument, that we existed. A lot of people question whether we do. We have $350 million in assets, so obviously this is quite important at this stage, despite the big tumble. And all of this is very important in this ecosystem.
And speaking of brokers, Aliya, Itzkowitz, you are from a broker, Enigma Securities. And what your firm does is somewhat different from Michael market-making ETPs. You're actually doing over-the-counter transactions instead. So maybe you could just say what's changed in the last year in terms of actually doing those trades.
Yeah, that's right. So we are also a liquidity provider, but we're mainly doing OTC trades of the top 10 currencies. Just to speak to what Laurent was just saying, in terms of sort of the ease of some of these processes, that's definitely been a development in the past year. So for example, when our founders decided to set up the company about 18 months ago now, they were starting from the position of already having an established brokerage company, which is called Securities. So that's our parent company. And in the beginning, it was very difficult to even find a custody solution. I think we started some conversations at the Consensus Invest conference last November, and then it took a few months just to get up and running. I think what took them 6 months to achieve back then could probably be done in about a month now. So that just speaks to how much the market has developed, how many more people out there are now providing these kind of solutions. What has also changed is, in terms of what we specifically do, is the fact that the ICO market is so challenged right now. When I first joined as a research analyst, a lot of what I was doing was reading white papers and looking at projects, which is something that I love, but something that I've done a bit less of recently for the simple reason that it's very difficult to sell some of these tokens right now. You look at a chart like a lot of the ones we've been shown today, people are even questioning whether they want to hold major currencies. So trying to sell the absolute riskiest asset got very challenging. So more of what we've been doing now is focusing on the major currencies. Yeah.
OK. So if you basically just stop doing ICOs altogether and it's just top 5 cryptos?
Not altogether, because I do think it's important not to lose sight of what we're all trying to do here in this movement, which is really always comes back to the underlying technology and the ideas that are out there. And the innovation certainly hasn't stopped. And I think, as soon as the market gets back to a place where people want to invest, these projects become very interesting again. So I personally still do a lot of talking to projects, understanding the underlying vision, and just seeing what's out there. It's amazing just the range of applications that blockchain has. I mean, as has been discussed, there are people out there that were just kind of jumping on the bandwagon as a way to raise funds. But I think there are a lot of fascinating things being done, and I still keep abreast of that, but a bit less of what we're doing on the trading side.
OK. Now, Michael, at your firm, you're very fortunate in that not only do you make money on the way up for cryptocurrency, you also make money all the way down as well. So market makers are some of the very few firms, well, I suppose brokerage can as well, but you're in the market much more often. What have you noticed over the last 12 months as crypto has fallen? Obviously, volumes have dropped. Have spreads tightened at all as more firms take a look at this?
I mean, the spreads have been way tighter, I would say, compared to last year. And also with regards to the volumes, I don't think they've really dropped that much, even in terms of US dollar volumes. I mean, there was a period where there was really a lot of trading, but I mean, last weeks have been, of course, very volatile and have had a lot of volume. So those are exactly the situations where we are good at. The difference with trading with the more traditional markets compared to the cryptos are more related to the risks, and that's something that is probably the most difficult about trading cryptos. And also, given like these prices falling down, it's sometimes difficult to manage. I mean, that creates all the opportunities in the market.
OK. Could you give us some examples of what those opportunities might be?
I mean, there have been quite a few incidents over the last 2 months, 3 months that have created a lot of opportunity in the market, but also have not been very good for the market, such as the Bitcoin Cash fork, which is it was quite strange how it all evolved, and I don't think anybody really benefited from it. Obviously, the stablecoin Tether. There has been a lot of movement in that one, and those have been risky events, but eventually they led to volatility and volume.
OK. And just the idea of spreads tightening, I mean, that's actually quite interesting. You know, that's what's been happening in the wider ETF market for several years now. Could you give us like an indication? Is it like half what it was a year ago or a quarter?
No, I think it's more like 3-4 times as tight as
Wow.
Yeah, as 1 year ago.
Okay.
But by then, there weren't that many institutional firms like us competing in that space, and that's changed a lot.
Okay. Well, that is that would hit your revenue capture considerably. But good news if you want to go out and buy crypto ETP after this presentation. Okay. Laurent, you used to be a market maker yourself, but in fixed income ETFs. Now you're on the other side of the fence as an issuer. How have you found the last 12 months? Are people still coming into the market looking to make a profit from very short-term movements? Or what do you think they're doing, people who hold your product?
It's definitely a mixed bag, to be honest. And certainly if you look at last year, the ride has been phenomenal. I mean, we've seen where we started around 20,000, and we're now more or less around 3.5. So obviously, this has not been a very good year for cryptocurrencies as a whole, for anyone. But what it has been able to create is certainly a backbone for people who want to get into this. Because you know, if you look at where the levels are, if you want to invest, and let's face it, cryptocurrencies are a speculative investment today. There's no real fundamental why you would have invested in cryptocurrency. So you're looking at the likes of market makers like Michael, who generally can find opportunities in making money. At the bottom line, our product is a Delta One product, and that's what a market maker does. They look at discrepancies, and they're trying to find that a P&L within the derivatives market and the underlying as a Delta One. That's what it means. And so they can actually capture some trading profits. And that's what people will look at. So they favor volatility. We heard about this earlier on. And this is why we have a product. We've literally made allowing that to note holders. We give them that choice on an exchange. So people can trade our product just as if they were trading cryptocurrency. And let's put it in perspective. It is still today very hard to buy cryptocurrencies because you've got these wonderful wallets. You've got to transfer money to some unknown exchanges. And all of this is quite daring today because you might not even be sure that you're going to get that money. So having more market makers and accessing all of these new types of issuance, not just ours, but generally what there are there. There's quite a lot of products out there. You know, what we're seeing is that the friction between getting your funds into this digital asset is very difficult today. So we welcome more market makers. We welcome more industry players in this. And this has probably been the year which allowed that. Because last year, let's face it, 2017, there was a phenomenal price appreciation. And this really created a lot of disruption and value into this. But ultimately, people starting to understand more why they want to go into this. And there's obviously a lot of demand. And in most cases, most market makers, they're driven by demand. If they have flows, if we talked about spreads, if spreads are tight, for us, you know, our product is only going to be successful if spreads are tight and we've got enough market makers. So it's important for us to have as many brokers, market makers, who can access these products and give the people a choice.
Yeah.
Yeah, just to get on the back of that, I think, you know, that this is why the ETF is such a big deal, obviously, for everyone. And Laurent's already doing something a lot like that to a certain extent, Europe-based, but he's already there. And I think, you know, just the idea of removing that friction is what we all hope is going to create that inflow of funds. And when you talk to most crypto bulls today, they'll talk about mainly two things. They'll talk about backed, or NASDAQ and futures, or they'll talk about the ETF. And you know, I think probably the reason we had that big sell-off this morning / last night was that once again the SEC moved back that target for when they're going to approve the VanEck ETF, and they keep moving that back. And I think the more they do that, the more we begin to lose faith that they're ever going to approve it anytime soon. And that's a big challenge for anyone who's trying to make a convincing bull case right now, just given the fact that it's become a bit of a boy who cried wolf. Like, when are they ever going to actually approve this thing?
I think that a nice project that was listed 2 weeks ago shows the sort of also the capabilities of what blockchain is able to. Because when I used to trade ETFs and I wanted to create an ETF, I had to deliver a basket of shares, and these could be like 100 shares over several countries. In order to settle all of these, it took at least 2 days for me to deliver all the shares to the issuer, and then I finally got the ETF. And with this ETP that was just listed, I was able to create an ETP within 1 hour, just because it allowed you to send over the cryptos directly. And so that's actually quite a nice application, I would say, for the financial industry, which we will hope to see more, actually.
And just to be clear, you're talking about the Amen ETP in Switzerland. Hani Rashwan was their CEO was on a panel earlier. That's the product,
correct.
isn't it? Yeah, okay. So, I mean, I take your point, Laurent, about there being plenty of market makers and brokers, but actually there's not an awful lot of exchange-traded products out there on which to trade. I mean, I know full well that you would love to push out a few more, but it's kind of a bit tricky with convincing the likes of the FCA to go ahead and do that.
Yeah, so first of all, we're listed on Nasdaq Stockholm, and our regulatory framework, certainly for the issuance of these products, are governed by the Swedish FSA. So I think we can all say that today, the Scandinavian market, certainly Sweden, is very much ahead of the curve when it comes to a digital transaction. And they've certainly, whenever you go in Scandinavia, they're certainly very much ahead. You don't really need any cash, so they could do quite like that. So we worked a lot with the regulators. We are very much regulated by Nasdaq Stockholm with their surveillance team, and so we go through a lot of scrutiny in terms of what we're holding. Our product is very much a Delta One. For every unit that you buy on the exchange, you will have the equivalent of Bitcoin that we hedge ourselves with. And just to come back to one of the points that Michael raised, as a market maker, that's so important, because when you're buying an ETF behind the market maker, what he does is he hedges with an underlying basket of stock or fixed income. And that can be quite problematic because you've got to buy 20,000 units, so your basket might not be fully optimized. And that obviously is a way of managing the risk. But as a cryptocurrency, when you're buying a basket of cryptocurrency, because the nature of them is you can fragment them, you can actually divide them in different decimal, it's very easy to hedge yourself. So, our product is on the Swedish line, it's 200 units to 1 Bitcoin. But, let's assume that you're buying 100. Well, we can easily buy half a Bitcoin. So it's very easy. And for a market maker, that makes a lot of sense. And you're also right to mention that there's not really been that many coming in. For a long time, our product has been on the market for 3.5 years. We had difficulties finding market makers. So we're very much encouraged by the likes that flow traders are now coming in. There's brokers now accessing the markets, providing access to their clients to these products. And this will only allow more catalysts in this space. Certainly if we look at the rationale why you want to be invested in cryptocurrencies.
Okay. Aliya, does your firm find it easy to buy and sell the underlying?
Well, I mean, sort of similar to what Michael was saying, the challenged nature of the market right now is not, in some ways has benefited us. Volatility is good. I think probably the most challenging period for us was actually about 2 months ago when, if you remember, Bitcoin was hardly moving, which was quite strange. If you compared it to some tech stocks were much more volatile than crypto back then, which was sort of a strange thing to observe. But so volatility, in a sense, has been somewhat helpful. That said, I think for the bigger picture, it's a challenge, and I think a lot of the challenges that Laurent brings up, they're all linked, and that's kind of the problem here. It's very chicken and egg. There's a liquidity problem, which is causing the huge volatility that we see, but we won't really get that liquidity until we get some more regulation in all likelihood, and then more institutions feel like they can participate. So it's all kind of linked in this cycle, which is a little difficult to break. And for someone like me who's trying to analyze the market, it makes it challenging because it all does kind of hinge on regulation right now, and I don't know Jay Clayton will do tomorrow. I can't read his mind. He didn't sound too much like he was in any hurry when he spoke recently. I think he often brings up issues like surveillance, things which it sounds like other exchanges are managing to do, but still a problem for the SEC.
Has any regulator ever been in a hurry about anything?
Maybe dodging your questions, maybe. I don't know.
Yeah. Speaking of questions, if anyone wants to pose one to the panelists, I can read them out. So feel free to go ahead. And just thinking about what's going to come next in trading crypto and crypto securities. By which I mean exchange-traded securities. At some point, these things are going to stop falling, and that's going to present quite a different challenge for you. If volumes pick up again, as Bitcoin maybe rises, dare we even speculate about that? Do you expect at some point that the market will pick up and it'll become more kind of mainstream, more like the rest of your ETP market making business?
Yeah, hard to tell. We hope so, obviously, but we don't really know whether that will happen or not. It's still kind of a risky thing for us. Also, if the price will drop to like 0, then the business is gone for us. So we don't know yet. I think it's important for us and for everyone involved in trading to be really proactive about trying to be open about their structure, about their compliance, and that could lead to more adoption and more stabilization of the market.
Yeah. I just want to briefly return to your point about spreads on crypto ETPs collapsing from earlier. Is that because of increased competition from other electronic liquidity providers, HFTs, whatever you want to call them?
That's definitely one of the most important things. I think a better infrastructure also helps. More reliable exchanges will help. I think there have been a lot of improvements with regards to custodying crypto assets. There are now quite a lot of custodies that are being regulated, and we're at the point that we even can insure against hacks. So I think those things really help also for people to join the market.
Okay. Laurent, what do you see coming when one day crypto stops falling?
Well, as an issue, I have to be agnostic, really, to a price. I mean, I'm not calling, where this is going. There's a lot of people out there that are better suited than I am. We have a research team actually within our group, and they do a great job. And I know it's a difficult challenge today to put a fundamental analysis of where Bitcoin is going. But ultimately, I feel that the more people going into this, parking some investment into it, most likely disposable income, will create suddenly potentially a small rally in this space. And so far all I hear is people saying that at the end of this year, Bitcoin is going to go to 10, 15, whatever. And it's not achieved this. So why don't we just get back to where this all started? And literally we're looking at a digital asset, and people feel that they should be invested in this as, like we heard on an earlier panel, diversification. So you've got your conventional financial assets, and now you've got your digital assets, and they should definitely be part of potentially a portfolio management. And and all of this then looks at spreads. You mentioned the earlier product that was just launched a couple of weeks ago. Spreads were very wide. They're now starting to shrink, and we're seeing more adoption into this. I mean, certainly in our products, when we started, spreads were slightly wider. They're very tight. We trade around 20, 25 basis points. So obviously that's very, very positive for an investor community, and certainly for the likes who want to come in and out during the day. Again, this is trade. This is creating volume. So market makers provide that very tight spread, creating volume behind it. And so we're seeing a move from what these spreads usually look at very widely and say, well, there's no way I'm going to invest my money in there, to suddenly very tighter spreads and say, well, actually, I can get into this and get my hands dirty and just see how I feel, mainly because we're getting to see more market makers. And the infrastructure behind it makes it a lot more easier to access this infrastructure. It was incredibly hard to do this before. Now we're seeing all the competing market makers that we see in conventional ETF going into this space. So this is great news for the ecosystem.
Got a question especially for you, Aliya. You'll be pleased to hear from the audience. Chris at Spec Trading, and he just inquires, what sort of volumes exist in the over-the-counter market during the last 12 months, basically during the downturn?
Hi, Chris. Let's talk more offline about specific numbers. But definitely, we've seen an uptick recently with the volatility and the sell-off. I can tell you that in terms of trends, volumes are up this week and the last 2 weeks. They were down during that sort of stagnant period. But we can talk more about the numbers. I guess just going back to the original question about what happens next year, I'm definitely of the belief that it's completely overused, but I think FOMO is important in this market. I think FOMO, bloodbath, and Wild West are the most overused phrases in all the journalism on this topic. But I think FOMO is important, and I think the minute things begin to stabilize or inflect upwards, you're going to see a lot of institutions that feel that they have to have some kind of presence. I think diversification is going to be an important driver in that, and it may be very small, but I think that was the bet that the founders of our company took. They already were operating in FX and equities business, and when they started Enigma, I think the thinking there was, okay, so a lot of these clients 2 years from now, they could have a small crypto desk as well. A lot of our hedge fund clients, family offices, et cetera. So I think that's where I think on that FOMO affects us all.
Okay. Well, if anyone was in the session earlier with Yves from Toban, and he was talking about Bitcoin being like chlorine, I personally like to see that more used. It's much better than Wild West. Okay, we've got a question. Not specifically for you, Michael, but I think kind of you're probably best placed to answer it. Jonathan Kay at Gain Capital says, how do you see the industry overcoming its reputation for price manipulation and information asymmetry? I ask you because you've probably got more information than anyone else.
Do I? Yeah, so on some exchanges it probably happens. I don't really know, but it's important that these exchanges will get regulated at some point, and that's why I think it's also important to open up from trading and from exchanges to gather together, to maybe have their own code, as was mentioned earlier, and that could really help the reputation, I think, and solve these kind of problems, because they've been before in every asset class, of course, and before they were regulated, you've always seen things happen like that. Okay.
And actually, if you're saying that spreads have collapsed by 3 or 4 times, then that kind of suggests that the information asymmetry that was definitely once there has become much less bad.
Yeah, I would say so. I mean, by making markets, we sort of make also the spreads tighter, making it more efficient. So, yeah, naturally that will happen, I would say.
Okay. Well, thank you very much, all of you, for your time and for coming here today, especially from Amsterdam, a bit further than everyone else. And yeah, turn it over to Nuala. Thank you.